Hello and good afternoon, everyone. My name is Matthew McCoro. I'm here to take you by the hand and walk you through a strategy that essentially helps to identify a stacking technique in the market. Now, stacking, we're going to talk about looking vertically up and down on a chart and looking for telltale signs of a pending move to occur, and typically a big move. Okay, so we're talking about when this strategy aligns itself, leveraging trend. We're going to talk about momentum and a distinct and specific pattern type. Following this, we typically see a breakout occur. And so it's not just going to be about pattern recognition today and taking you through a deep dive in it. It's also going to talk about how we manage money and how we trade with the method. So that's where you get the stacking technique of not only individually looking at stocks individually. If you trade options, then you can stack trades on top of a stock position by also leveraging options with it. Okay, so but essentially we're going to take you through a fully transparent walkthrough, and I'm seeing some of the names here of attendees. A lot of the names I recognize that I've worked with before, so it's a pleasure to have you. And if we haven't worked together yet, if you haven't seen me in a workshop like this, then I'll give you some more information on myself here in a moment, just so you can understand who you're working with today in more detail. But what I want to do, since the bell just closed, I didn't want to start right out Forex, and then all of a sudden my computer bells start ringing. I'm sure many of your computers did the same. So I wanted to make sure that we had a nice clean audio background without all my bells ringing. All right, so at this point, let's do this. Let's just simply make sure that everything's working properly. I described the event today as a workshop more so than anything else, because I like to really spend my time teaching, coaching, walking through trading scenarios, taking you through a full walkthrough of how I like to look at trend, how I use various trend lines on a chart, how I search and find trades using specific stock screening filters that I'm going to give and allow you to walk away with today. Okay, so nothing I keep hidden. I like to keep everything right up in front so you can see exactly how everything's done. And if you like this style, then of course you can, continue to leverage this strategy for yourself. So at this point, you should just see a slide that says sound check. You should be able to hear me clearly. If that's the case, then use the question section inside of GoToWebinar, and that's how you and I will communicate back and forth. So if you can hear me, you can see the slide. Go ahead and let me know that you're here. Say hello. If I didn't see you, we had an event during Thanksgiving, so if I didn't get a chance to say it, I hope you had a wonderful Thanksgiving. Hope you ate to your heart's delight, if that's your thing. Hope you enjoyed your friends and family. And I know my group of traders, we had a great time coming back this week and taking advantage of the market. So it looks like everything's up and going. We got Vicky with us, Darren, perfect. Thank you, Ralph, Inez, Stereo's with us, Ashton's with us. All right, perfect. All right, so at any point in time, if there's any questions, I'm an open book. So if you have any questions, I'd love to hear about your question, even if you think it's maybe too complex, maybe you think it's too basic. I keep the chat private because people will put in all sorts of information about their, personal email addresses, phone numbers, things of that nature. So I just learned a long time ago just to keep things nice and private. If you don't want me to share a comment, you can just let me know too. I have a good instinct over the last 15 years of doing this to know what to say aloud, what not to, what to keep to the chest and what to share with a group like this. So rest at ease there. No one else can see your contact information. No one can, pull your emails and start mailing you some brand new dishwashing detergent or something like that. Okay, so all your information is nice and secure here. No one can see your information. Of course, I can. That's how I can chat with you. But at this point, it looks like we're all good to go. Appreciate all the feedback. There's more of you, but I want to make sure we can maximize our time. So what we're going to do in summary today is we're going to talk about combining momentum and trend patterns. Okay, so momentum is, in my experience, one of the most underutilized data points for retail traders. And I think a lot of it is just because of how people use the word momentum. You'll hear momentum used a lot when following different technical analysts on, talking shows on mainstream media, on individual coaching sites. They'll talk about momentum. Hedge fund traders use the word momentum. But in essence, for us retail traders, what we look at is volume. Okay, so we're going to talk about spectrum of volume, high volume, low volume, in distinct combination with trend patterns. So if we can combine direction and reversal points with momentum behind it, it's going to help us answer the questions: what, when, and how. What are we going to trade? When do we trade it? And then how do we manage that trade? That's the quintessential 3 simplified questions that we traders ask ourselves every time we get our mind set to jump in the market and trade and invest, right? It's what we're going to trade, when do we trade it, how do we trade it? And that's what we're going to use, is this specific focus of momentum and trend patterns to answer those questions. Now, what we're looking out for is we're looking at for a key point in the market, a point in time where we have alignment of trend pattern and momentum all at one time. And I'm going to share exactly how we do that. But here's some recent examples of trades. I got some more recent examples here of actual trades that we just hit a profit target on today, actually. 2 specific trades that I'm going to highlight with you so you can see exactly what it's like in the real world. This is all previous trades, but there's an example of stacking profit by buying a long call on Gurn, which is a energy company, 120% in about a month. Okay, this is also trading the opposite way. This is gold. This is a mining company, not the precious metal itself. The reason I show this is because we can make money in red days, green days. So this is, instead of shorting a stock, we actually bought a long put. So directionally, we took advantage of a breakout going down, a squeeze point, a stacking method. And so over time, the strategy I'm going to share with you has built up a long track record of being able to capture profits in the market. So what you're seeing here is results from signals from actual trades that I've sent out to different groups of mine. Since August 2020, we've captured over 3,500% net profits. That's with winners and losers added up, and that's the net profit percentage. Now, the reason I show profit percentage is because everyone has different account sizes. Everyone trades with different average dollars per trade. And so by using a number like this, you can associate it to your specific trading on what this has done in the past for someone like yourself. So if you trade $3,000 per trade on average, following this type of trading, that's over $100,000 in profits. That's not including your trades, that your trade investment, that's on top of that investment. But we're going to talk more about recent results because this is a built-up track record for a long time. Now, anytime I talk about results, many of you have seen a disclaimer like this because it's our obligation whenever we talk about performance to always let you know that trading in the financial markets carries risk. That means if you place a trade, you put money into the market, you could lose that money. The way I like to keep it simple is to only use risk capital. Risk capital, in my definition, means money that you could lose and still be able to put the same amount of food on the table, keep the same roof over your head. That to me is risk capital. Now, I believe we're all adults, but ultimately this is something that we have to address. So if you're not quite ready or if you're not quite confident, then don't trade with real money. Use a practice account. Okay, so ultimately I think we're all intelligent enough to know that there is risk associated in trading, but I want to make sure I do my due diligence and highlight that. Now, the focus of today, and then we're going to jump into the charts. 90% of this presentation today is a workshop on charts, okay, in as real time as we can get on the charts today is where I spend the majority of my time. But I want you to understand what to expect. Life's about expectations. Trading to me is about expectations as well. So what you're going to be able to walk away with is a simple process. More so important than that is a repeatable process. So it's not going to be something that's going to take you months and months and months to figure out. My goal is to make it simple so then you can repeat your successes and avoid repeating mistakes. I'm going to give you, I'm going to flash on my screen, I'm going to leave it up on the screen, one of my 4 most used traders checklists so you can actually see and take away with a screenshot exactly how to use the formula that I'm going to be teaching you today. Okay, so that's how upfront I'm going to be. I'm going to show you every step of the process. My goal is to empower, is to teach. I love to teach. I love to coach about trading, the psychology of trading, and more so providing an ability for you to always have an expectation. My goal is to avoid the uh-oh moments. I want to avoid the shock and awe feeling of the market not moving in the direction that you thought it was going to go, right? That's my goal, and that's what I'm striving to teach you all today, is a simplistic yet repeatable process to always understand, are we going up or down? Is it going to go up or down fast? Okay, those are some of the questions I want to be able to answer with you today. And then at the end of the day, if we're in the financial markets, if we're either brand new trying to learn so we can start beginning to invest, or if you've been trading this market for years, the goal is to make money, right? We want to use the money that we have and we want to make more with it, right? It's a simple return on investment conversation. So I teach this. This is not a new strategy by any means. I've worked with thousands of people throughout my career on this type of trading. So by no means is this untested or is it new. And so I'd say that just so you can understand that this is not something that just came out of my back pocket on the way here today. Okay, so this is something that's tried and true, and you'll be amazed at the transformation. Now, for those that I haven't met yet, my name is Matthew McCoro. I've been teaching, coaching, trading. I've been in this industry since 2007. I actually earned my chops, I guess you would say, back starting in 2007. At the time, I began working with and at the largest financial education and trading technology company at the time. I actually was paid to learn how to technically trade on charts. So the company primarily focused on the foreign exchange market, so trading currencies. If you know anything about trading currencies, then you know that it's a highly technically traded market. So your success in trading currencies is highly dependent upon your ability to analyze charts. So that's all the analysis of trend lines, support, resistance, Fibonacci sequence trading, all the different various indicators out there. I've earned a black belt in all those techniques. Now, throughout my career there, I actually moved up from a trainer coach all the way up into become the chief revenue officer. And my number one objective was generating revenue. And so with that in the organization, I was responsible for not only the sales teams, marketing teams, product creation teams, customer support teams as well. What it did is it gave me a behind the scenes access to thousands of data points around issues that clients face, traders face, as they go about taking advantage of the financial markets. And so I've taken a lot of that experience and decided to recreate some of the wheel of helping people overcome some of the most common obstacles that I see traders face. And one of the most glaring obstacles for traders to be consistently successful is getting direction right. You know, you get direction wrong when you buy something and it goes down immediately, right? You buy it and then, the market falls right off the table for you, right? That trade goes the opposite way very quickly. And if that's happening to you, then that's a symptom of just getting the timing and direction wrong, all right? And so that's some of the techniques I'm going to give to you. Some of the main techniques is overcoming direction in a simple way. So that's just one example of some of the experience that I've had that I've taken and recreated the wheel around to make things easier for retailers to pick up on such a strong and key process of trading, which is being on the right side of the trade. Momentum is something I believe fully in. I believe in charting as a tool to help, and with some simplistic filtered processes, we can leverage technology to help find us trades. Okay, so that's what we're going to give out today. So at this point, we're going to jump into the markets because I want to make sure that by the end of the event, you know how to identify clear breakout patterns. I want you to understand how to use trade types, right? So the actual way to set up a trade where it becomes autopilot. doesn't matter what account you use or have. I have an account that I've used for a very long time with Thinkorswim, TD Ameritrade, but you can use the entry strategy that I'm going to give to you on any major brokerage firm. The third thing is I'm going to give you a step-by-step checklist as promised. Okay, so you're going to be able to take a screenshot of it, take it as your own, use it as your own, to your heart's delight. Okay, that's what we're going to accomplish here with the next hour and 10 minutes. So with that out of the way, what I want to do now is get to the fun stuff, and we're going to go to the charts. Now, the charting platform I use, and you can use any charting platform of your choice. Nothing I'm going to give to you today is proprietary to this company, and this company is TradingView. Some of you may have seen this before. It's a highly popular platform, but this is my platform of choice. Now, you can use your free brokerage charts. You can go to stockcharts.com. You know, any software out there will have the indicators that we're going to use today. I use 4 indicators, and I'm going to give them to you in a second, so that way you can follow along specifically with this strategy today. All right. What we're going to do is we're going to actually run this through stocks of your choice. Now, I've traded many different stock symbols, unique stock symbols throughout the year. But what I want to do is I want to get a list of stocks that you're interested in. It could be ETFs too, exchange traded funds. So at this point, let's just build a custom list for today, and I'm going to ask for your participation. So at this point, you have my permission. Go to the question section and give me some stocks. Give me the stock symbol. It makes it easier for me to load up. So give me the stock symbol, and I'm going to build a list for us, and we're going to use that list to walk through this profit stacking method here tonight. So go ahead and go to the question section. You know, keep it to less than 3 a person. In an event like this, we'll have several dozen at times come in. So let me know what your choice is. You may be in the trade, maybe you're thinking about it, you're analyzing it, whatever it may be. I'm going to build it. December 1st, 2022. Holy cow. And this is one of my favorite groups, Investorexpo. So let's build it. Holy cow. Jeez Louise. All right, I got to scroll up here to start. Okay, so Caterpillar, Apple, you got Tesla. Let's see, JP Morgan, got the S&P, FXE. Oh, we got a little currency ETF. I like it. We got GLD, the Spider Gold, M2K, the E-mini Russell. All right, let's go. I don't want to do dupes. SPX, obviously it's close to the SPY. You got the NQ, NASDAQ Futures, DraftKings, NIO, Upstart, FCX. Wide range here. I like it. This is a wide ranging portfolio. Baidu, McDonald's, big money there. McDonald's, the 10-year treasury. Do we have FXI already? Okay, nope, we don't. We got large cap China ETF. Why did that not work for NQ? Did I click the wrong one? Oh, there we go. We'll do the continuous one. All right, NQ1. Oh, we got more. Holy cow. Mosaic, WTI, Boeing, SoFi. All right, then we have a Bull 3X shares. I like it. Semiconductors. All right, that is good enough. I know if you have more, I do apologize, but that's a long list, right? Okay, so we have a list. Now, we're going to break this down into 2 steps. First thing I'm going to do is I'm going to break down what's on the chart, okay? Once I break down what's on the chart, I'm going to talk about the difference between analyzing an active chart, okay? Because the list you all gave me here on the right here, this is all of the stocks that you all just gave to me. Those stocks are in a different pattern at this point. I don't know what stage they're in yet. Here in a few minutes, we're all going to know exactly what stage those trades, those stocks are on the right. Well, there's also ETFs, okay? The symbols, there's also some futures contracts. Whatever's in that watch list, we're going to analyze those. We're going to take a look at them. But then there's another piece of this puzzle, which is actively looking for a new trade. Okay, so we're going to look at this in two approaches. Number one is what's happening on this list of stocks. Are they going up? Are they going down? Are they at an active extension? Are they retracing? Are they at an opportune time to buy in or to close out, right? And then we have the other hat, which is I want to find a trade right now. I want to find a trade in this moment so I can set it up and be ready for tomorrow. So that's the two sides to this. Anytime I build a list, I don't know what stage they're in yet, but we will. So analyzing here, and then I'm going to go through and we're going to find a trade and we're going to set up a trade. Okay, so we'll actually set up a real trade with this method into an account, and I'll show you exactly how to use what I call the hands-free, arm's length, objective, the anxiety buster. I could come up with several different ways to describe it, right? But we're actually going to show an actual method of setting up a trade at one time. So you have an entry, you've got your stop loss, you've got your protective profit target all set up at one time. So that way you set it at once, you never have to touch it again. Okay, everything is objectively set up, and that provides huge levels of freedom that many traders enjoy. So let's start with breaking down Caterpillar. Now, Caterpillar had a huge boost after their earnings. The reason I know, because this came up in a class that I had a couple weeks ago. So I talked a lot about Caterpillar. What's interesting about Caterpillar is we are at the time discussing how strong the dollar index was. So the DXY, the dollar index as a whole, was extremely bullish. And the real impact was to multinational companies. Caterpillar is one of them. Another example of it going the wrong way is FedEx, where they were just beat up by the international revenue due to inflation and also heavily on the currency difference between the US currency and other global currencies, all right? But Caterpillar weathered the storm, but how they weathered the storm was by massively increasing their US sales. That overshadowed their loss in the international revenue, but that's just a side note. All right, so the first thing I'm gonna do is I'm gonna break down what I have on the chart, and then I'm gonna reverse engineer how we use it and the why behind it. So the first thing I'm gonna do is I'm gonna get rid of some of these, but the classic stack here is a moving average. There's 3 moving averages. These are simple moving averages. You can use exponential, you can use weighted. You want to use all 3 of the same type, but I'm going to keep it simple. So these are simple moving averages. The first one's a 10, that's a 10-day. The second one in yellow is the 20-day moving average, and the third one is in red on the chart. That's a 50-day moving average. Now, the reason I use this specific combination, this 10, 20, 50, is due to the hold time that I look for in a trade, meaning when I get in and by the time I get out, that's the hold time of a trade. This pattern, this specific 10, 20, 50 model, generally gets me in and out on average about 3 weeks. That's my average hold time. As of late, it's been faster, but over 2 years plus, over 400 trades that I've sent out to my traders, average has been about 3 weeks. So it's in my definition, it's a swing trader's setup. If you're a scalper, you're using a slightly different combination. If you're a position trader, investor, where you're buying and holding for weeks and months, I use a different combination there as well. So I just want to highlight the big reason for this specific setup is if you're interested in swing trades, you're holding positions for days and weeks. So it's not minutes and hours, it's not weeks and months, it's days and weeks. Okay, so that's just some of the premise here. I always get that question, but I want to answer that up front. Now the 10 is our short-term inner trend line. Okay, so it's the less days, the closer to the price that moving average or that trend line acts. Okay, so that's why I call it the inner trend line. Then you have your secondary trend line, which is the 20-day moving average. So it's basically in the middle of those. And then the 50 day is one of the most commonly used. A lot of institutional money will use like a 200-day, 100-day, 50-day combination. So the 50-day is very common. It's common domain usage, but I use it as our ultimate uptrend or downtrend. So if we're above the 50-day, as I peel off some of these, I'm going to hide the 10, hide the 20. The 50-day becomes that up or downtrend decision. So whenever we're above the 50-day moving average, then I want you to think uptrend. When we're below it, that's downtrend. Now, if we're above or below the 10, above or below the 20, that's going to tell us a story as well. But the ultimate trend is going to be this 50-day. So if you think about days in the market, well, there's on average, there's 20 trading days in a month. Okay, so this is a 2.5 month trading average. So it's a smooth looking trend line. It's less erratic up and down fast versus the 10-day, because I'm only looking at 10 days worth of data. And it's an average, so it's a live rolling average. So if I go back any point in time, I can know what was the 10-day average at that time. So I'm going to talk about the relationship of the 10 and 20 and 50 in a moment. So as I flash through this list, Caterpillar's an uptrend. Apple, Apple's coming back to an uptrend. See, I just came back above the 50-day. Tesla, below the 50-day, that's in a downtrend. JP Morgan, uptrend. So the value of having an objective or formula-based trend is that we don't need to manually draw on all these charts. You know, back in my Forex trading days, a lot of the analysis was done manually. So you'd pull up your chart and you sit there, start drawing your trend lines, your inner trend line, your outer trend line, your long-term trend line. Some of the reasoning behind that is in the Forex, you don't trade a lot of different symbols, right? You'll trade the euro dollar, the dollar yen, the pound dollar, dollar Swiss, the loonie, right? There's only so many symbols to trade in the Forex market. So you can get by with that. Well, in the stock market, you know, there's over 7,200 common stocks. It's almost impossible to keep up manually with all that analysis. The other benefit of objective is math-based, is that it's a consistent data every time you use it, right? It doesn't matter what side of the bed I woke up on. If I'm above the average, I'm above the average. There's no level of discrepancy or discretion that I can leverage on emotion, right? If I'm not feeling well, or if I'm over optimistic, I'm going to run into an issue, right, of drawing. So I want to remove art from the equation. So, yep. So we want to make sure we're on the right side of these trades. So as we switch through here, you're going to see very fast recognition. So FXE, we're above the 50-day. Now, this is, once again, this is not the only trend we're looking at. I'm looking at what is the ultimate heavyweight direction. Spider Gold is up. Okay, watch, see how fast we're able to go through these. M2K, above the 50-day. SPX, above the 50-day. So the first thing we do whenever we pull up any chart is we're looking to see where are we at in relation to the prevailing or the heaviest weight of direction. So very quickly we're able to scan through and find these. Now, I never just manually go look at charts. When I want to trade, I set filters up and I find specific symbols at a specific time. Great question. How do you know if it's going to turn, right? So I got a question. How do you know it's going to turn? This is where we have a combination of the three of these trend lines together. So as I walk through this, we're going to be looking for a specific pattern that helps us know what to expect next. What to expect next? That's the real focus of forecasting, right? I'm going to forecast what's the next move. So when I scroll out here for a second and put more data on here, what we're going to be looking for are reversal points. So the question was asked, how do you know if it's going to turn? We know it's going to turn when it turns. I'm not being facetious. I'm going to give you the actual visual data pattern that's going to help us see that about to occur. Okay, that's the essence of a pattern reversal. So as you move above and then go below this 50-day, that's what I call the reversal point. So when you're up, then you go down, that's a point of reversal. The only way to realize or to see a reversal is that we have to have a standard of what qualifies as a change of direction. So as I come back here, this is the beginning of the year, actually the summer of 2021, excuse me, right? So Caterpillar's trending above the 50-day, and then bang, on June 10th, we have a change of direction. We're up, now we're down. Understanding how trends, because that's what these moving averages are, they're trend lines. They're trends, they're average trends over a specific period of time. So once again, we're not subjectively drawing on charts, because art has large levels of subjectiveness to it, right? My daughter is 9 years old. I think she's a great artist at 9, but I'm her father. I'm biased. If I posted one of her pictures in the room, I'd probably have 50-50 of you would be honest and say, well, yeah, it's cute. That's adorable. Some of you may be like, that's not so good. My daughter's better, or my son's better drawer. Okay. That's subjectiveness. It's opinion based. So when we look to data, we want to be on the opposite side of that spectrum, which is data driven. So all of these moments where we're swapping sides, coming back down again, those are reversal points. All of these are reversals. That is a sign of a pending change of direction. So when we start layering in all of the other reversal points, all the other trend lines, we get earlier data that will tell us that something is about to happen that's big, a big change of directions coming. So to answer your question in short, it comes back to, where do we find the biggest movement on a chart? It's after a reversal point. After a reversal point. So if we can understand what a reversal looks like, what is actually happening on the chart, then we can go find them. So on Caterpillar, as I start zooming in here, you can see we ran into resistance right here. And resistance, if you're not familiar with it, right? Resistance holds price down. It resists price, keeps it down. Support pushes up price, supports and lifts price up. That's what trend lines are. They're angled support and resistance levels. And so commonly, when you're up against a key point in the market of support or resistance, you get a battle. You see how we have markets trend and then it starts going sideways, and you start to see a consistent price around, in this instance, the 50-day average. That's a sign that it takes momentum to bust out of that resistance. Transactions, the act of buying and selling, drives the financial markets. Many of us know that from an early age, if there's more buyers than sellers, price goes up. If there's more sellers than buyers, then price comes down. What I'm here to show is that when there's a reversal where it was down, then it goes up, that there's a larger percentage move that occurs following that than there is at any point in a trend. So a trend has several waves and can last for extended periods of time. If I come back here to the recovery after the COVID shutdown, look how strong this trend was and how long lasting it was. But it wasn't in a straight line. It may feel like it, but it's not. Market went up, comes down, up, down, right? There's these support resistance battles all the way up and down the line. What creates such a big move like this? So from the reversal point, when we actually were closing above, from that reversal point here, Caterpillar's rallied 23% in 42 days. Yeah, great question on Apple, because Apple's in that choppy condition right now. I'm going to show you, layering on these trend lines, how simplistic it is to see what's happening, to be prepared for where the breakout's going to go. Is it going to go up? Is it going to go down? So 23% at this reversal point. Now, to confirm a reversal, one of the telltale data points to look at is volume. Volume. So I'm going to bring back this volume indicator. Now, this is simple volume. This is not dollars. This is the number of shares traded. So if you're following along with TradingView, you add the volume indicator, but you need to turn on the moving average around the volume. Just looking at the transactions themselves doesn't tell a story. We have to be able to measure and weigh, is there a lot of volume or is there a little bit of volume? Is it a surge of increase of volume or is there low volume? High volume, low volume tells a very distinct, different story. So down below here, what we're looking at is a column chart. Out of the gate, volume comes in a line chart, but I change it to a column chart to get a better visual representation of what's happening. And then I turn on this moving average. I want to base the volume on something, because if I don't have this on and I look to the 27th of October and I see 7.8 million shares, it looks like a lot, seems like a lot. Is that bigger than normal? Is that average? I don't know, unless I have something to measure it against, to stack up against it. So by having a trend, an average trend of trading activity, which is the volume indicator, the moving average indicator, now I have a measurement. Are we seeing increase or decrease of activity? That tells a story. But what we're going to do is we're going to look at a combination of aligning pattern with volume. So I went back in time and I erased the future. And we're back here to the 21st of October. Talk about reversal points already with the 50-day. Look down below. What we're looking for, this is the telltale sign. This is in my coaching, I describe this as an aggressive bullish breakout. That's what this is right here on the screen. It's when we have a change from being below the 50 to crossing above the 50, as you can see on this bar, plus we have a surge of trading volume. So I know visually we have a surge because the column is taller than the average. So it's greater than the average. The other way to look at it is in this top left column, you have two data points. Next to vol, VOL 20, there's two numbers, 3.484 million. That is the daily number of shares traded. So on Friday the 21st, 3.48 million shares were traded on Caterpillar. The average, the 20-day, it's a 20-day volume average. 20-day. The reason it's 20 days on the volume is because my mean middle trend line is 20 days. I always want to have my volume average aligned with my middle average. So I have a level of consistency in the data. So the middle, that's why it's a 20. If I'm on a 50, 100, 200, my volume will be 100. Okay, if I'm on a smaller moving average pattern, then I'll have whatever's in the middle. I always use 3, magic of 3 moving averages. So it's a 20-day. So when I see 3.5, we'll call it 3.5, I'll round up a couple thousand shares. Okay, so 3.5 million. The average has been 3 million. That's a spike of volume above the average. This is a combination that I want you to visually start to recognize. I want you to look up and down vertically. So when you see a reversal from down to up, and then you see volume behind it, that is a tell that the next move should be a breakout bullish to the upside. That's the sign. Now, a lot of people looked at it and go, oh yeah, the earnings built it. Sure, the earnings really helped it. But by recognizing the shift, the market already shifted. You know, it's almost like the market had some insight, didn't it? Because the 21st was actually the breakout sign. The earnings was just added fuel for the fire. So earnings came out on the 27th. The pattern changed on the 21st. That's how we get ahead of trying to chase down economic data or fundamental data and focus on what we can control, which is objectiveness. This is the tell. You can go back on all these. You can go to Apple as we go to the next one, scroll out and look at the reversal points. Reversal points, volume. You see these volume bars here? That's in July. Bang, rocket ship. It goes the opposite way too. Bulls and bears, red reversals or green reversals. Green to the upside, red to the downside. Same thing on the red days. Okay, when the market was down, then it goes up, right? When it's up, then it goes down. Same story. Look at all these points of reversal. Look down below. You're going to see a surge. See that surge below? Big spike, 122 million shares on Apple. We were up, we went down. Okay, that's a point of reversal. Look what happened after that. So the question comes, well, what about all this stuff? It looks like you'd be whiplash, in and out, in and out. Once again, it's a combination effect and layering in to get into trades. So for me, this would not be a scenario over here where I'd be whiplashed in and out, right? This is not a strategy where you're buying and selling every cross, right? You cross it, you're buying it. Oh, you go back down, you sell it. When we're looking for new trades to get into, I'm not looking at setups in an active trend already. I'm not looking for a chasing mentality where something's moving and I'm jumping on it, right? It's like a squirrel, right? The squirrel's always looking around. It's like a meerkat. Remember the meerkat videos from the early 2000s? Or you'd have, that's really before, you know, those are like animated GIFs at its finest, right? The meerkat standing up, looking around. Because when I'm searching and I'm teaching my traders and I'm giving out signals, giving them trading opportunities, I'm not looking for this type of pattern. I'm looking for this pattern. I'm looking for this pattern. Looking for this pattern. Right? So I don't pull up a random stock chart and say, okay, I'm going to buy now. Well, I'm not going to buy now unless I have a reason to buy now. If I'm looking at McDonald's and I pull up McDonald's and it looks like this to me is more likely to come down than it is to go up. Where do I want to be? I want to be here, right? This is when I want to be in these trades at the point of reversal. So that way I'm not trying to over trade a symbol just because I like McDonald's. I'm looking for moments of time like this. Let me give you an example here of a recent trade to go along with this training. So I'm going to go back in time. This is Pfizer. This is an actual trade. We hit the profit target today. This was an actual signal that I send out. So I run a trading room. It's called the Market Pro Live Club. And I also provide a signal service program where I leverage the strategy I'm teaching you. I then find trades. I then send them to my traders. Got hundreds of traders. And I give them specific trade details. This is an option trade, but I use the underlying stock. So we bought a long call for Pfizer. And this is the initial setup right here. This is the initial trading setup. This was found using the aggressive bullish screener. I'm going to give it to you, all the details in a second. So I found the trade here, showed up on my list on the 25th of October. Look at the chart itself. Remember I talked about finding the reversal. I don't want to be messing around with choppy charts. So what I do is I start by filtering and cutting the market down. And at the end of this filter, there's going to be a list of stocks that meet my criteria. This is my criteria. Remember what I talked about finding the reversal point? Do we have volume below it? We do. So how we catch these trades is we follow a very simple trading setup. you see it says pending entry order. So what we do is we have a mindset of catching breakouts, not chasing breakouts, catching them. To catch it, you have to be there waiting for it. Right? Even when we're fishing, right? Think of fishing, right? Catch fish, okay? I put, no matter if you're trolling, if you're shore fishing, right? If you're freshwater, saltwater, we're trying to catch a fish. And most oftentimes, they're coming to us, right? They're coming to our bait. Unless you're spearfishing and you're diving down. I'm in Florida, so spearfishing is a big pastime, in Florida compared to someone like, Missouri, okay? But we're catching. That means we're there and we have to be at the right time. I mean, if you've ever been fishing before and you have one of those slow days where you can't catch anything, isn't that more of a symptom of not being at the right spot, right? If you're at a lake, right, there's fish in the lake. How come the fish aren't catching your bait, or, right? They're not in the right spot. Hey, Keith, good to see you, buddy. No worries. Okay, so the whole mindset I want to shift from a chasing mentality. Chasing is a lot of work. Right? Chasing is a lot of work. If you're constantly running around trying to find that big home run, right? You see something take off, right? You see a stock, by noon's up 10%, and you get what's called FOMO, right? The fear of missing out, and then you start buying in, and then you go, man, why is it pulling back at the end of the day? Uh-oh, it's reversing the next day, and you're like, man, how did I miss this? Why, I missed the 10%, and now it's going the opposite way, and I don't know what to do, right? That's because we're chasing, right? What I teach and what I love to do is to sit there and I wait. So I set up my trap. I set up that beautiful lure, got my bait, beautiful bait, and I have it sit there, right? Knowing that I'm at the right spot. Now, if the fish doesn't bite, the fish don't bite, okay? No matter what we do, there's no absolutes in life. There's no absolutes in love and family. There's no absolutes in fishing. But if we have as many of the odds on our side as possible, if we stack the law and the odds of probability on our side, then over time, we're going to catch some good fish, okay? Well, same thing with a breakout in the market. We're going to catch some breakouts. Sometimes we catch them, sometimes we don't. But as I showed earlier in results, this method does work, okay? So what we're going to do is, I wanted a mindset like this chart where I set this up. So this signal says the 5th. But what happens is I found this at the end of the market. Right now, 4:49, I'm on the East Coast, okay? I'm in Florida. This is the time I trade. I don't trade market hours. I don't trade and do live market orders where I hit the go button when the market's live. These orders sit there and they execute on my behalf based upon how I set up these orders. This is the ticket of this trade. This is what it looks like. Just to give you an idea, I'll walk you through it in a moment. But this is the exact ticket of the Pfizer trade that I sent out to my traders. This is what the ticket looks like. In the confirmation dialog, that's the screenshot there. I'll walk you through it here briefly. Then I'm going to show you, because like I said, we're gonna find a trade tonight. Okay, we're going to set up a real trade, live trade. But this is the ticket. As you can see, this is an option trade. So it says we're going to buy 2 contracts of Pfizer. You're going to select the 16th of December expiration, $45 strike price. It has a limit on the option premium of $2.40. Okay, so that's the most we want to pay for this option. Now, below that, it says order condition right here. Number 1, order condition. So there's 1 green, which is the buy order, and you have 2 reds, which are selling orders. It's a bracket. It's called the OCO bracket. One cancels the other. This is set up one time, don't have to touch it again. And I like that style of trading because it removes the emotional management of your trade, managing an open P&L. Okay, not having a clearly delineated exit, be it stop loss, be it profit target, opens us up to emotionally managing a trade. By arm's length setup like this, objective setup, the market's closed, we objectively find a trade, we set up the trade, Now we let the trade do what the trade's going to do anyways, regardless if we're in it or not. The market's going to move with or without us retail traders. So this is a contingent order type combined with an OCO bracket. Sounds complex. It's really not when I walk you through it. So what the first section here is describing and telling the broker what to trade and when to trade it, and also how to manage the trade. This is a what, when, and how all in one trade ticket. So what we're going to trade is Pfizer. We're going to buy the option, $45 strike, set a $2.40 limit on the premium. When do we buy it? We only want to buy this option if Pfizer marks at or above 45.83. So what and when? We want to catch a breakout. I'm not trying to buy this cheap. I'm trying to catch a breakout moving trade. Instead of buying the stock, we're buying the option. Long call. So it's a contingent order. Now, the two red orders are my stop loss and profit target. So same thing here. I'm going to sell my contracts, and this is the stop loss, if Pfizer marks at or below 43.76. That's the stop. So if the stock goes down to 43.76, close out and sell my option automatically. Don't wait on me, just close it. The third order here is the profit target. That's what was hit today. So you're going to sell the contracts if Pfizer marks at or above $50.18. Once this is set up as it was set up, look at the time in the top, October 25th, 1906 minutes, 51 seconds. As you can tell, the market was closed on October 25th at the time of this trade being entered. This is how 95% of any trade that I place and I send out to my traders, this is how we set up the trade. It's a catch method. All done at one time. The only time we mess with this is if the market flattens out and we get up to expiration, then I send out instructions of how to exit the trade manually. So this trade triggers automatically, and it triggered on the 26th. Here's the actual trade tracker that our traders have access to. It shows when we got into it, what are the trade details, everything's lined up. We bought in, got in at 242, got $5.55 was our profit target. That's what we ended up collecting on the option. All done automatically. Okay, once we set it up once, it's all done. Everything lined up all at one point. What's interesting about this process that I really enjoy is the execution is automatic. So here's the exits. You see the Pfizer trades. This is my filled orders. This is today. You see the date. It filled at 9:31 in 8 seconds. So as soon as this hit the instructions, as soon as the conditions were met, remember the conditions here, sell 2 contracts. Those are the Pfizer contracts. When Pfizer marks at or above $50.18. That is the contingent or the contingencies that created the sell to happen. I wasn't in front of my computer at 9:31 in 8 seconds. You see this order type, market. Okay, so that executed at the market of the premium based on the conditions of the trade I set up. So I got a question, how do you calculate options limit price? I'll show you that here in a few minutes. Very simple formula. I'll show you how to do that, okay? These orders in green, here's an example. See this COTY, HPQ? These were signals that were sent out to my traders last night. These are new orders. Remember the green orders? One triggered for COTY at 10:56. This one triggered automatically this morning at 9:33. Under my working orders, there's HPQ, waiting conditionally. So here's my 2 bracket trades, my stop loss and profit target. They're now waiting conditionally. So the essence of this process is that your entry is set up waiting for the market the next day, sitting there waiting. If it goes live and triggers that breakout price, I then have my protective selling orders, 2 selling orders, bracketing my trade at all times. I'm never left naked to the market. I always have a clearly defined exit. 1 to mitigate loss, 1 to maximize my profit taking and automatically pulling profit off. This is why I enjoy that ability to be as arm's length as possible from the most important decision. The most important impact or decision made is when money's on the line. So when I have open P&L, right, when I've got a running trade, that's when anxiety is at its highest. It's at its peak. So if I can objectively set up everything from the beginning, make my conscious decision to know, look, I know what my risk is. I know what my profit is. If I'm not comfortable setting up the trade without it being live, then I'm not going to be, why would I be in that trade? But as long as I can consciously agree with the trade setup details, then I've done the hard work and I've set up my trade. And at that point, I'm going to be arm's length. I don't have to come in and manually make a decision at any point of that trade's journey. So from the entry point, what happens is all that has to happen the next day is the entry has to be marked at or above, and it does the next day. You can see here, right? So that automatically triggers the trade. So now I have my exits. Well, through the last, I don't know, little over a month or so, including the holiday, here's the actual trade. What happens at this point, what I do is I then monitor at all times what's happening with these trades. And if necessary, what I'll do is I'll send out adjusted stop loss placement. So that way we can maximize the trade. If the data is showing that we're probably going to reverse, then let's cut our losses. There's no reason to lose the entire stop loss. Let's move it up. Or in this instance, you see how it says 11.15? I sent out a new stop loss because we're already well above our entry. We're already in the money. Let's not bail out and lose on the trade. Let's just make sure that we at least have profit on this trade. Now, ultimately, it never came down. It didn't have to stop us out, right? And then today, you'll see there is our opening close. Okay, so we opened, bang. That's why at 9:31 we exited the trade. Let's see. Why is the profit target at 50.18 instead of 48? So there's 2 things to pick in an option chain. I don't want to get too complex on this. The simplest way I pick my targets is using previous resistance. Okay. Same time, I need to see a runway, right? For me to put money in an option, we need to see a significant underlying stock price move to check the box. Okay, so to me, it's not about how fast I get out. It's about let's maximize a trade. If I'm going to put money into a trade, I want to at least have 70% plus in profit opportunity. 70% plus. Ideally, it's triple digits. But at a minimum, I want to see. So there's ways to read it and select an option chain and to select which chain to take so as to maximize that investment. So if I've got $1,000, $2,000, $3,000 in a trade, I want to make sure it's not just for 20%, just for 30% profit. Though that's a good number, it's not as good trading an option, right? Because we use leverage. So yes, 48.16 is a viable previous resistance, but based on the resistance laid out at the point of trade, I knew that was going to be hit, but I knew that we had a high probable chance to hit the second resistance away. So if we're going to set money aside, we went with the 50.18 price. But I like your eye seeing the 48. It's a good eye you have at this resistance. Based on Pfizer, based on the reversal, there was a lot more legs to this. The other secret I look at too, right? One of the secret, it may be a secret to many, but if it's not to you, then that's good. I also look at this analyze section. Now, every broker has something like this. This is just where Thinkorswim has theirs. But this is statistical analysis here. So this gives you a cone of probability of price. So it helps to set what some of the high price points are in a specific time. So if I had January expiration, which we had, well, we actually had December. Yeah, so we had December expiration. Then I'll come to the week before. You see how it says 53.08 today? So that's the 85% probable price down here, the spread. Okay, so this is I don't want to get too complex here, but this is a way to find out where what the odds are and how far that spread is between high and low. But like I said, I don't want to get too far down the rabbit hole, but that's a way to see what the top end looks like. So if I see something that's really high, like $53, $54 at the time, well, I know that this has a lot more legs than just capping out my profit. I don't want to cut profits, right? That's the balance is we want to let our profits run. We want to cut our losses. We don't want to cut profit and let losses run. So much of this is maximizing the trade itself. Yeah, that's the question. How did you know that? The 50.18? Well, previous resistance point, right? So market likes to go where the market's been before as a concept and a phenomenon that exists in the marketplace. So what I do at point of trade is I'll go and I'll evaluate several things, but number one, I look at how much resistance do I have against the price, right? Because remember, resistance keeps price down. So what I'll do is I'll come in and I'll label resistance using fractal high, so official high, so to the left lower, to the right lower, and I'll define them. So there's a support resistance in advance. Okay, so I have these templates, so because when I teach, I have color codes, people can see it and recognize them, right? So my purple is my support resistance, right? So I know going into a trade, what are the support resistance levels that can keep my trade from going up? That's what resistance does, right? Resist the price. So I know that there's resistance here, resistance here, resistance here. There's actually 3 levels of resistance on top of this. So what I do is I expect the market to pull back off this. I see all of this. I know what's in front of me. So if I have a situation where I have a lot of resistance on top of me, then I don't trade that. I skip that trade. I'm looking for as clear as a runway as possible up. That's what I look for. So as the market goes, you see how we ran right into this resistance point? I already expected that. I expected us to run into resistance. That means pull back off that price. I already expect it. Look what happens that third day from there. You see how it came all the way to that second resistance point? Market likes to go where the market's been before. And then what it does, it'll find support. That's why I have S and R, because support and resistance will interchange. You'll have resistance at one point, then like this, it turns into support. Support and resistance is fluid. It goes from one side to the other. See how this supported up the price? It resisted it back here on the 26. Type in a yes if this is making sense. Are you following the support resistance I'm discussing? So I can go levels deeper. I just want to get a litmus test here. Okay, making sure everybody's following so far. Yep, okay. So remember, I keep saying the word expect, expectations. This helps manage anxiety. If I know going into a trade that I'm going to expect road bumps at these price levels, when it happens, I'm not caught off guard. I also know that what was once resistance turns into support like this. Okay, so it resisted here, then it supported, held me up here. So what I do is I look for the action around these levels. If at any point in time we start to move below those levels, then I say, uh-oh, we're going to reverse. But as you can see, as I laid it out here, we had support the entire movement up. At no point was any of these 2 levels were taken out. None of the 2 levels underneath were taken out at any point in time in this trade. We had extensions, we had retracements. We had 2 extensions, 2 retracements. Ultimately, the third is what we experienced today was this move, right? So there's 1, there's 2, there's 3 extensions. So we weathered 2 retracements in this overall trend. And I already expected all of these retracements to occur. And I already had a plan if we broke and went down below these, what to do, right? I always have an expectation laid out. And so because when I was here at the point in time, let's pull up the screenshot. I bet I have the implied volatility. Well, I don't have the other analyze side up. I didn't save that side. So at the point in time here, I went to this cone of probability and I always go a week before, right? So the 16th is the expiration, but I always want to be out at least 7 days prior. That's my golden rule. Be out at least 7 days prior to expiration, so we don't have the big theta hit, okay, time decay. So I always come the day before. I'll show you in a second when we find a live trade. And this number changes, but today the probability, the high side probability is $53.03 by December 9th. Okay, that's the Kona probability. It's a lot higher than it was initially, right? Because we have new data. Okay, we didn't have this much data on the 25th of October. That was in the past, right? But now we only have a few weeks, not even, right? We have 8 days to come to the 9th. So this data is a lot more closer to the current price because it's coming up, right? It's more recent. As you see, if you come out to February, you see how wide this spread is in February 2023? The farther out in the future, the less we know, right? I know what I'm doing right now. I'm teaching a wonderful group at Investorexpo, my favorite strategy, right? I know what I'm doing right now in this moment. 5 minutes from now, I have a good general idea of where I'm going to be, right? 6 months from now, I've got a wider range of probabilities of what I'm doing. Okay, that's classic statistical analysis, right? That's classic probability analysis. So understanding some of these nuances can help give us a breadth of movement. We have an expectation of how far this price can move. Okay, now it's a probability, there's no absolutes, but that's some of the different nuances that I teach is how we read through some of this. But expectations is what's important. Let's go to another recent trade. This is KD. This is a very short trade. Okay, this trade was sent out on the 22nd of November. Same setup. I'll show you what this ticket looked like. Same exact process. This is where we were. This is a conservative entry. Okay, there's two types of entries that I teach: an aggressive, which is that first cross, and then I have a conservative. So the difference of this pattern is that we have the 10-day above the 20, the 20 above the 50. And let me go side by side and show you the difference. I'll go side by side. You'll see a distinct difference between Pfizer, which is an aggressive entry, versus KD on the left, which is a conservative entry. So remember, this is where we entered this trade, was down here on Pfizer, way down here. Okay, so I'm going to go back in time here too. Now the dates are going to be different. So take a look here, right? You see how the 10 and 20 are below here? Okay, 10 and 20 are below. That's what makes this aggressive. This is our first break of resistance here. And we're far away from support on the 10 and 20. Well, over here on KD, you see how we have the 10 above the 20 above the 50. See this difference? They're both good. They're both entries. This one has less support underneath it. This has a lot of support underneath it already. Okay, so these are both. I'm going to pull up these checklists so you can see what it looks like on paper. Okay, so coming back to full screen on KD on the left, this is the trade setup. Stop loss below the latest low. Same conversation we just had with Pfizer. I knew resistance here. I knew resistance here. Went with the third resistance line at 1182. There's our profit target today. So Frank's got a great question on Pfizer. So why so aggressive in a downtrend? So the Pfizer move lends itself to the conversation about spectrums. Okay, high, low. High volume is a spectrum. Okay, so think of volume spectrum. You got super high volume, you got low volume. Those are the opposite spectrums of each other, high and low. When we look to a trend strength, okay, some of you may have heard this, fast up, fast down, right? Type in yes if you heard that saying, right? Fast up, fast down. The phenomenon about fast up, fast down is because we have to think in terms of transactions, buying and selling. So if there's a rush to buy, right? There's a lot of buys, price goes up fast. How do we get out of that trade? If I bought something and it goes up 20% in a day, what do you think I'm probably going to want to do? I'm going to probably want to realize and take my profits, right? I'm going to take my money off the table. Well, if there's a huge enthusiasm behind something, what happens is you have all these laggards, right? You have the initial people that are at a reversal point. Hopefully that's you and I, right? We're at the reversal point. So we're getting the biggest surge, right? We're getting that biggest price swing, which is that initial swing, that initial shift in the market. And then we're hitting profit targets. We start getting out. But then you have people that are late and they start buying in, but they can't buy enough fast enough because we're selling, right? We're selling faster than they're buying. Well, what happens is then you have that big snapback. I call it a snapback. So you widen the rubber band and then all of a sudden that rubber band breaks and then it pulls right back and it snaps you, right? That's a fast up, fast down scenario. Well, the phenomenon in the market happens the same way. So when you see a wide spread and you know, hopefully this is resonating with more than just a handful of you, because it's very powerful stuff and I don't want to, skip over it because it's a phenomenon that's exciting to look at. So for Pfizer, the comment was, well, why so aggressive on the entry? Because it was so bearish. Well, because it was so bearish and we had a fast reversal, you see how fast it came back up? That is why it really jumped off for me, because we were bearish so fast that I anticipated a fast reversal because of that phenomenon of fast up, fast down. Well, it goes the other way too. The opposite spectrum is when things are so weak is down, that there's a high propensity to come back up. Another thing that happens, okay, is short selling, right? Short squeezes happen. So when there's a lot of shorts on one side that draws price down fast, to get out of a short, you have to buy. So it's not only people buying that are new to the trade, it's people getting out of their shorts. So people were shorting Pfizer in actual short positions. To get out of the short, they have to buy. So it flips over, right? So it flips, and that's what creates this fast up move following a big down move. Same thing in a fast up move. That's why in a fast up, you get a big move back down again. Same phenomenon. So we're not guessing, right? We're looking at data points that are lining up with us. An aggressive entry on this trade for my group is trading down here at the cross this reversal on the shorter time frames. That is, in my group, we would consider that an aggressive entry trying to catch a bottom, right? We're trying to buy a bottom. Well, we leverage the smaller trend lines, as you see down here. The phenomenon of the smaller trend lines on a strong down move is that ultimately it's going to come back to the middle again, to the mean, which is the 50-day moving average. So I teach how to recognize this pattern that sets up a snap. When we start flipping and building support down here, that's an aggressive move. As many of you could tell, I haven't switched indicators through this dialogue, right? I'm using the same base setup to look at all of this. That's the beauty of this strategy, is that it doesn't matter what's on the chart. You can go to Upstart. Let's just pull another one. And I just want us to visually recognize and look to where these trades presented themselves. Now, Upstart, look at this fall, right? I mean, Upstart had a nice start, up almost $400. Now it's down here at $19. But if you come up to these points, these pivotal reversal points, you'll see volume spike at these pattern reversals. You'll even see it up here. Look at that big old bar. Look at this big bar, gave you the tell before it even broke out. Look at the volume down below. Look at the up move. There's the volume. There's the aggressive move here. See the vertical look up and down? That's upstart. Go to whatever we looked at. Let's go to NVIDIA. Okay, here's NVIDIA. Must have been looking at this chart. I got analysis here. Okay. You see this reversal up top? We had a pattern reversal. Okay. But we didn't have volume below it. And we need the pattern reversal and volume. So we don't have volume spike until here on the 4th. Okay, that's what you wait for. Requires patience. Now, I don't like to teach patience because patience is hard to manage. Okay, so what we do is, instead of us looking individually like this, looking at charts, random charts, because they're random to me, what I do is I go look for them. Okay, so this is how I find trades at a particular point in time that I want to trade. This is TradingView, but once again, you can use this filter setup on any, stock screener of your choice. Thinkorswim has one. I mean, Bar Charts has a free screener. Your broker, I guarantee, has a screener of some sort. Okay. This here in front of us is the filters that I use to find aggressive bullish breakout stocks. Okay. This is an 8 filter. So there's 8 filters that must be checked off for a stock to show up in my list. So what we're going to do now is actively go look for a new trade right now. We're going to actively look for a new trade. I'm not looking at a random list. Okay. I'm going to be looking for very specific types of patterns here. And I'm going to walk you through what they tell us. They're going to answer a lot of questions for us. Number one, I use symbol type. I'm looking for specific common stocks. I want stocks that are listed on the New York Stock Exchange, ARCA, the NASDAQ, and then the greater New York Stock Exchange itself. Okay, so for me, this is a liquidity. Can everyone see the green okay? Do you want me to change colors? Is the green showing up okay? Let me know if it's too light. I can change it. So liquidity. What else is liquidity here? Well, my market cap criteria. So I like to trade small caps or higher. Okay, so small cap is typically defined as 200 million is considered a small cap. Okay, so that's why I have 200 million, and then I have is over 2 trillion. So the apple. Okay. So my minimum though is I want 200 million or more in a market cap. The reason why for this is it helps to find optionable stocks in this search. Okay, so that's liquidity as well. The next filter I have is volume. So this is today. This is the most recent volume is what this looks for. This is also liquidity. Okay, so I'm looking at stocks that at least traded 1 million shares, at least 1 million or more. Now, I have another volume filter, which is average volume in the last 60 days. So the volume here with the 1 million, that is today. I want the most recent activity, they have to have at least 1 million shares. I'm not going to look at it. But the average means I want to see an extended period of time of trading activity greater than 1 million. Okay, so one's an average, one's a real-time volume indicator. Okay, those are all liquidity. So 5 of these 8 are based on finding liquid stocks to trade. This next one is relative volume. This is where momentum is. So I got M for momentum. What this is going to pull up are stocks that traded above their average. So this is when we look to the chart and you see the fuchsia line, the moving average on volume, that's what this is picking up. So the stock must have traded above its average trading activity. So that's my momentum filter. The bottom 2 here are patterns. So this is pattern related. I want to see a positive change in the day. Okay, so I'm looking at daily charts, right? So this is a positive above 0. Okay, so I want to see a bullish day. I want to buy a bull and I want to buy a bear. Okay, that's what that is. And then the final filter is also pattern. This is where the price crosses up on the 50-day moving average. That's that aggressive flip from down to up. That's why it's bullish, because I'm trying to buy at a reversal point. So just with 8 filters, I'm answering liquidity, I'm answering momentum, and I'm answering pattern. So now, once I go to my list, I have 15 matches. Okay, so of the 7,200 common stocks, I have 15. Yesterday, because of the huge volume, there was 70 something in the list. Okay, today was less volume, which is expected, right? Another word, expectation. I went over out of class on Monday nights. I went over the expectation of low volume today on Thursday. Okay, so there's 15 matches. Watch what happens on the charts. So the first one up, this is Meta. So remember the charting patterns we've been discussing. There's Meta. See the cross of the 50-day. Splunk, gap above the 50-day. Fidelity, just crossing that 50-day. There's DocuSign, crossing the 50-day. What's the key is we're structurally looking at the same pattern that we found Pfizer on. So now I'm not hunting and pecking, okay? I'm clicking, looking for a specific type of trade. I've got various filters that we use, different screeners that we use based on the condition that we're looking for. But what happens is now I've got an extremely focused list. At a particular moment of time where I've got a pattern reversal plus momentum in alignment at the same time. Let's say I want to be conservative, like the KD trade I showed, okay? Well, I'll pull up my conservative bullish filter set. This one has more patterns, right? The price is crossing up on the 10, okay? The 10 is above the 20 is above the 50, okay? So there's more pattern on conservative. So now I've got a list of 12, okay? So one I had 15, one I have 12, right? Here's Moderna. See, we're above the 10, above the 20, above the 50. We already saw Splunk. They could be in one, they can be in the same one, depending on what the pattern is. There's Activision, Toronto Dominion Bank, just had earnings today. How'd they do? Yep, so Toronto Dominion hit their earnings numbers. Let's see, VFC, okay? Just look at the pattern. So now we're and look where we're at. We're at and around that initial reversal point, right? It's not like I'm looking at, you know, Apple that's in a triangle pattern, right? I'm not looking at a position like Apple that's in a transition. Okay, I'm not just randomly coming. I'm not looking at a McDonald's that is petering out on the top. That's probably going to retrace deeper. Okay, I'm not just randomly looking. I have a specific. How many of you think this would be helpful, right? How many of you think having a list generated by these patterns could be helpful? We have the same thing on the bearish side too. It's just flipped over, right? So instead of crossing up, we're crossing down. So if you want to find shorts, you want to buy puts, you want to look for the opposite direction, then we have the filters that go that way too, okay? They're just inverted, right? So no longer are we stuck with a specified and short list. We're expanding our bucket of opportunity. We're not focused on one particular company. We're focused more on finding a breakout pattern, regardless of what the exact company is. Obviously, we're looking at strong companies based on my filters, right? These are all common stocks. They have at least 200 million in market cap. They have volume, they have liquidity, and they have momentum behind it. That's why when you look at my list of trades, there's only about 10% of them are duplicated, meaning they're traded more than once. That allows us to expand once again the opportunity, because now we're more hunting for pattern breaks than we're hunting for a specific reason to buy a particular stock. We flip the script and we reverse it. So any questions on the use of this filter, let me know, of course. But I'm going to pull these up so you can see them. And that way you can take a screen cap of exactly what the details are if you'd like to. Let me hide my bookmark so you get more real estate here. There you go. So here's the filter settings. So if you want to take a screen grab of them, exit your full screen window. So you could, if you didn't know, you could take screenshots with GoToWebinar, or you can take a picture on your phone if you want. But if you exit the full screen window, you can actually there's a camera that shows up in the top of the viewing window where this is being shown or shared on your end, and click that camera, and then you'll save whatever's on my screen as a picture, okay, as a picture. And that way it'll stay in there. Question, do you already have these on Thinkorswim? Now, I don't use Thinkorswim's filter screeners, but you can. I've been using TradingView, but all of these exist there, right? That's some of the insights from my perspective. You don't need expensive charting software. You don't need these softwares that charge, hundreds of dollars. I have the lowest version of TradingView. It's called Pro. It's $14.95 a month. And the only reason I have it is because of watch lists. That's the only reason I pay for it. I have plenty of traders that run these filters, run these screeners, trade with the method I've shared without paying. You can use TradingView's free version. All right, I'm just anti-software. I've been in the business too long. As a chief revenue officer, we sold software, and being behind the scenes, you realize it's really unnecessary. So I'm anti-expensive software personally. That's why I like to give out free resources like TradingView if you need to. At this point, let's find a trade. Okay, so we're going to go through and find a trade, and we're going to look and break down this checklist. That's all I'm going to do. All I'm going to be doing is I'm looking for the legwork is done. Okay, so I already have exactly what we're looking for. The setup is done here. Now, the beauty of this, if anyone has ever any questions, if you like, let me just take a pause here. If you like this method, if you like my teaching method, if you've learned a few things that maybe you didn't realize or that you believe can help you, the program today that is in an open enrollment period is called the Rapid Profit Method. It is based upon leveraging the concepts I'm shared with you, where I send out, as I showed with Pfizer, Katie's are two recent examples, I send out my pick trades via text message, email support. The program for a year, it's an annual subscription, is less than $300 for the whole year. Okay, so we're not talking about tens of thousands of dollars. We're not talking about thousands of dollars. We're talking about less than $300 for the whole year. That also unlocks, and I give you access to my live trading sessions twice a week live, Monday nights, Thursday afternoon. Included with that, plus much more. I just want to put that out there for you. So you don't have to worry about mastering all of this today. Okay, I'm sure based on what I've walked through, a lot of the content should have been an eye opener, or at least spurred curiosity to say, man, is it really that simple or not? I believe it is. My clients do as well, but I just wanted to put that out that you don't have to master this today, okay? But I do, as promised, want you to have an opportunity to pull this up and take a screen grab of it. Now, if you want to trade the option, how we select the option is literally in a 4-step process. We look at the delta, we look at open interest, expiration, and spread. Those are the 4 criteria, basic criteria we look for, because we're spending our effort on the top. We're spending our effort finding the breakout stock. So we don't have to dig into all of the different types of option chains available. We already have in front of us what we want to trade. How we trade it is going to be an option trade if that's what you want to do, or you can trade the stock, right? It's all based upon what your preference is. If you are new to options or maybe just not quite confident in options, I fully understand and actually appreciate that the more you know, or the less you know, the more you know. I have options education to help if you're new that come with the program too, right? I want you to be able to realize and take advantage of the program. So if you're unsure about options, or maybe what I've said about options you just don't quite fully grasp, that's okay. I also have support there. So don't let that hold you back. But I'll walk you in detail in a second. But what I'm gonna do is I want to find a trade. Okay, so if I'm gonna trade an option, I have two steps. Number one, find what I want to trade on the stock side. And then number two, I want to make sure that the option, number one, is available, right? It's optionable. Number two, it's got the right options criteria. Once I have that, it's as simple as setting up the trade. Now, the options profit generator is different than the rapid profit method. So the rapid profit method is more of an open and flexible type of option trading. Options profit generator is a low cost, less than $5 premium pricing, whereas the rapid profit method is any type of setup that meets our criteria will be sent out. That's why you see a variance of price. On top of that too, there's different stock setups that we'll use in rapid profit method too, stock only type setups. But many of my traders have both. They get daily options with the options profit generator, and then they also get additional opportunities with the rapid profit method. All unique, never overlap, no similar trades. That would make no sense. All right, so now that we have a list of 15, now what I'm going to do is I'm going to go through and look for where has the biggest movement of opportunity. Okay, so remember, I want to be able to see what has the least amount of resistance. Now, I'm not going to trade anything that's $10 premiums. I like to keep my premiums at least less than $10. So I typically will look for stocks that are less than $80 on the underlying stock itself. Okay, so I'm just scanning through here, and I'm looking for opportunity that has the least amount of resistance on top of me. Okay, I want to have a runway. I want to have a map, a clear road ahead, and I want to make sure it's got good options. So I'm first starting off with the underlying stock itself, and then from there I'll show you. But I'm cross-checking Thinkorswim to make sure I've got open interest and all that good stuff. This one is a low cost one, but it may have liquidity. Let's see. Not enough liquidity. So basically what I do is I'm looking here. So here's the stock, right? And then I'm coming here to the options, and I'm looking at open interest. I'm looking at spread, and let's see. I guess that one's got some of the juice. All right, so that one. So okay, so we may be looking at GDRX. Remember the market cap. This is 2 billion, right? I know it's a $5 stock, but it's a 2 billion market cap. This is not a small unknown company. So it's 2 billion. So that one so far is looking pretty good between the stock, and then it's got the options that, remember the 4 steps. So all I'm doing is looking here. I'm making sure it's got delta in this range, so we're in the money. I'm looking at open interest to make sure it's liquid. This is liquidity on option chains. I'm making sure we have at least a 45-day buffer to allow the trade to move, right? So I don't want to be too tight. So theta comes in. Remember the swing trade type of mindset. And then I want to make sure the spread is low. So that one so GDRX, if you look at the checklist, we have a 60 delta. This spread though, 10 cents, it's pushing our boundaries of 10%. We'll see what else we have. Let's go to conservative. Let me take a peek there. Got Activision. I mean, TD looks pretty good. I like the pattern. I mean, our next resistance point, we have a small resistance here at 69, but other than that, you're talking 77 on the next resistance. That's a pretty open runway. And all right, and that one does check the box on the option side. So we got TD. Let's take a peek at a couple more. What's box doing? Utility stock, we got one of my favorites, Ford. We're already in a Ford trade. Yeah, so TD. All right, so let's go through TD here. All right. I like GDRX too, okay, but let's go through a brand new setup. So Toronto Dominion, it's got the volume. We're crossing back above the 10. I've got the 10 above the 20, 20 above the 50. Okay, this is a conservative entry. We've got support underneath us. Now from here, I'm going to find the high today. Okay, so I'm just going to sit on top and I'm going to go one tick plus. So the high is 68.38. I'm one tick above. This is catching 68.39. Okay. I'm going to make this blue. This is our entry. So this is what we're going to set for our entry point, our breakout. Next thing, I'm going to set my stop loss. I'm going to find our last low, and I'm going to go one tick below my low. Okay, so that's our stop loss. From here, on the profit, I'm going to do a simple look at analyzing what the high probable price is. So here's the expiration, the 20th. I'm going to be 7 days before that. Okay, so I want to look to the 13th, and I put my cursor right on the top of the bell curve, and that puts the high price to the left at 73.31. So my goal is I want to have a profit target that's less than that. Okay, but I don't want to just randomly pick it. I'm going to look to the chart pattern first. So I know now that based on Toronto Dominion, this is what the probability is after today is 73.31. Now that's today, right? But things change. So ultimately, I want to be objective. So this is the next resistance point, which is up here. So I want to put that as a additional profit target. I'm gonna put that as 2. So if you're trading a stock, you can use this as a second profit target. And then from here, I'm going to use a previous high, and that's amazing. See how this price is right on this high? So now that I know what that number is, I'm going to use this inside high is what I describe this as our first profit target. Okay. So at this point, we've got a stop loss to mitigate risk, and I've got a target that's objective, and it's also happens to be right at the probability number. Doesn't always work out that way, but in this instance, it does. If you're not familiar how to pick profit targets or stop losses or entry orders, I've got 10.5 hours of pre-recorded lessons on how to do this. Okay. So we have this stock set up. Everything's driven by the underlying stock. Simple reason why is the fact that options, right? The definition of an option is that it's a derivative of the underlying stock, right? So if as the underlying stock goes up or down, it impacts the value of the premium. So I look and I find the stock, and then I just simply trade the option, okay, with it. So 65.75 delta, that's going to put us at a $65 strike price. Okay, so we've got the open interest that checks the box. Delta checks the box. Spread's 20 cents, so that's about a 5-cent spread. So that checks the box. Okay, so at this stage, to set up this trade, we simply go to the ask, because we're going to buy a call. And this is obviously think or swim. Everyone's going to, if you're on a different platform, you can do this trade. It's just going to look different, of course, different platform. So we're going to buy this with a bracket. So remember, this is the one cancels the other. I'm going to move my chart over just so I can do this at one time. Now, I'm not recommending any specific contract size. Trade as you would normally trade. Now, I got a question about how to set a limit. I'm going to show you real quick the calculation. Now, we're going to catch, and we're only going to enter this trade if we mark at or above 68.39, 6839. The closing price today was 68.37. Now, it's not going to really make a difference because the close is very close to the high price, okay? So the premium here is basically going to be the premium limit I'm going to set is 440 because we're only a penny away on the underlying stock. But normally what you do is you take the difference between the last price and your entry price, which is 68.39. That's 2 cents. You take the 2 pennies, multiply it by your delta, 71, and then you add that to your premium. And that's how you technically, that's how I use a formula to get a limit. But in this case, we don't have to change it because it's so close together. All right, so now what I'm going to do is set the contingency. So we're going to buy the option only if TD marks at or above 68.39. So that's setting my entry. Then I'm going to set my stop loss. I'm going to leave that good till close because I want to have my stop loss open as long as the trade is open. So that's a good till close. Type in my stop loss, 65.42. And then I'm going to type in my profit target. Same process. I'm going to sell at the market if TD marks at or above 73.40. So now at this point, I've got my entry order and my 2 stop loss and profit target orders. Okay, I got my 2 sell orders all lined up. Let me take a screenshot so I don't lose it. So that's how you set up an option trade based upon the underlying stock to contingently execute a trade all at one time. So once I hit the send button, I now have a pending order in my account working. It's right here in green on top. All these other red orders are my stop losses and profit targets below. This is a brand new order. Now, if you've never set a trade this way, I wouldn't imagine you have. It's a very common used ticket process. The uniqueness is the fact that we're using and leveraging the actual underlying stock, which to me has always made perfect sense. If I'm going to trade the option that's based upon the underlying stock, then I might as well use the stock and find the mover and simply trade and stack with options. Now you can also trade the stock if you just want to be a buyer of the stock itself. Same exact ticket. The exception is we're not pulling an option, we're pulling the underlying stock itself. The flexibility for me of trading stocks is that there's no time, right? We don't have to worry about expiration. We don't have to worry about the option decaying over time. I got a question. Do you use a different method? The selection of what to trade is different. Like what I choose is different for the options profit generator. But all the same filters down here, but which stock I would pick and how I pick the option premium is different between the two, 100%. The rapid profit method, I'll use the snap down, snap up. I'll use what other checklists like this 200-day bullish reversal pattern. I have other bullish filters. So there's difference of filters, but the process of setting up is the same. Yep, is the same. This is how I set up every trade. If it's a stock trade, if it's an option trade, I use multiple targets. I use the same type of catch method where I'm catching breakouts. Everything's the same. How I read the chart, how I use the moving averages, how I use volume, no matter if it's a stock chart, ETF chart, makes no difference. It's all the same visual flow of momentum is all done at the same time with the same type of functionality. But yeah, it's definitely the rapid profit method is it's the way I describe it, it's kind of like my open canvas. The OPG is a very strict and regimented type of trade sent out. The RPM is a wide range of technique built into it. Yep, of selection, I guess you would say. Okay, but that's how we set up a trade. Okay, and now it's done, right? Now I don't have to worry about it tomorrow if I wake up on the wrong side of the bed. I don't have to worry about my mental state. I objectively found it. I set it up, picked the right trade. Everything's protected. If I go on vacation for a week, I don't have to worry in the back of my head about my open positions. I'm already protected. Everything's laid out. Everything is all laid out in front of us, right? And that's the beauty to me is having an ability to be as arm's length at the most crucial times, which is at the P&L level, right? At the P&L level. To give an idea, this is what it looks like. I have some questions on, what does the tickets look like and all that. So here is, I'll show you the exact Pfizer trade. So here's Pfizer. This is the email that went out. You can see the actual details here. So this is what it looks like. So alert goes out. Here's the option trade. Everything's laid out. You've got the symbol, you got the strategy, we buying a call, buying a put, you got what options expiration to choose, strike price to select, options premium, the trigger price, that's the entry, stop loss, profit target. This is the exact email that went out, sent it on the 25th, entry good till date is to the 26th, okay, so it's only good for the next day. Everything lined up. Now that I've walked you through it, do you now understand what this means, right? So if you got this email, also text message goes out, okay, same details. I'll show you what the text message looks like. It won't look the same as on your phone, but you get my point. This is what the text message looks like. Let me get that. All right, so here's the text message. Same details as the email. So you get on your phone if you want, all here for you. That's what the text message is. And then you have access. I got a question on the results. Then you have access to the trade tracker with all the details on it. I already showed it to you once. I'll pull it up again so you can see it. And then here's the trade details. For the last couple months, 346%. That's all closed trades. Okay, so winners, losers, 346%. So if you traded, $3 grand a trade over the last couple months, it's $9,400 in profits. Almost $10,000 in profits here. These open trades, these are open right now. These are trades went out last night, so these will go into the open trade. So we had a DQ Bank of America. If they triggered, I don't think they even triggered the entry. Let's see if they broke out. Nope. So you see how these are in my canceled orders. So Bank of America, DQ, they were sent out, but they didn't trigger. Okay. So if they don't hit the breakout, then it cancels automatically. All right. So that's a good example of the breakout not happening. Right. So we set up to catch the fish. Fish didn't show up. That's fine. No fish. Okay. Move on. So they're good for the next day, because if they don't go up and hit, then that means the pattern changed. Right. So we don't want to be in it. Versus COTY and HPQ, they actually came up and hit the breakout. They hit that entry point, okay? But that's all, I mean, everything's laid out. You got all the, so here's all the missed trades that didn't trigger. Okay, so you got missed trades, you got closed trades. That means they either hit the stop or hit the profit. And then you've got your open trades, that's your open P&L. And then you have your section for new trades. So tonight's trade will be here. So these will fall down into open, then you'll have a new trade here. That's how it flows down. There's that Pfizer trade down there, 129%, okay? So everything's laid out, so you have full transparency all done up front. So question is, when you say long, is that, yeah, so long call, those are buys. So I'm buying a long call, right? So buying a long put. Buying a long put is the down direction. That's just an old school terminology, long calls, right? Calls and puts, buying call, buying puts. If the opportunity is there, I talk about and I teach about writing covered calls. I don't write naked calls, but in the Market Pro Live sessions, the trading sessions twice a week, we talk about and break down all the different various markets, right? Because the condition today is nowhere near what the condition was and how we traded the market 2 months ago, 3 months ago, right? And so the ability to follow the same methodology, regardless of what we're looking at, it could be the S&P 500, could be the dollar index, all of the analysis is all the same. So we don't have to learn a new method of reading a chart because we're looking at a different type of investment vehicle. And so to me, that makes it easy to teach to and easy to walk through. So I've got questions, but I want to make sure that for those that have an interest in taking advantage of this open enrollment period, we don't have open enrollment period forever. Okay, there's a limited time because I don't like everyone starting randomly. So we do buckets of start dates effectively. So that way I know how to tailor the live sessions around new enrollment, so it's easy to teach and train and get everybody up and running in a few weeks, okay? So the buy, sell, and hold rapid profit method is, to me, one of the simplistic approaches, because the method, once again, is the same. The selection process, how we manage and select different types of chains, option chains can be different depending upon your distinct different personality comfort level, okay? But to follow along with this, I recommend you sign up for a text message. Make sure that you have your email, have us whitelisted so you get the deliverability up, and then you need to have a trading account. Okay, so at least you don't have to trade live, but I want you to at least have an ability to place practice trades, right? Demo trade, so that way you can gain the confidence without the pressure of real money when you start. You know, there's plenty of trades, so you don't have to worry about trying to rush through trades. I'd rather you be comfortable with the process, so that way you can really take advantage of our opportunity together. Other questions I get is options experience. I addressed this earlier, but I'll do it again here. If you're not comfortable with options, to me, I look at that as a good thing, because you don't have any bad habits. You don't have any prior conceptions of, you know, what's relevant, what's not. As you can tell, I like simple. So I'm going to teach you all about different options techniques, but initially, to get you up and running, I've got a special bonus. It's called the Options Mastery Academy. It's a huge write-up, a huge strategy document about all the various ways of trading options. And then in live classes, obviously, I teach options as well. So don't let options experience hold you back. If the concepts make sense, if the benefit that you see from this style resonates with you, then I'll work to fill the gap with you. Okay, so don't let that be a deterrent. I've got support built around it. Sequence of trades. Okay, the rapid profit method is evaluated and trades are sent out Sunday nights, Tuesday nights, Thursday nights. So Sunday night, Tuesday night, Thursday night. They're sent out between 7 p.m. Eastern time and 9 p.m. Eastern time. That gives you 12 to 14 hours to get the signal and go put it into your account to follow along. Remember, everything's given up front, so you don't have to come back to babysit or to ask me, you know, what to do next. Everything's laid out all up front for you. But that's the cadence with the rapid profit method. There's many a night, there's multiple trades. So I want to make sure you have enough time to get everything set up. That's the cadence. Red days, green days, as shown early in the presentation, give out similar type of breakouts as I've shown in several of the charts today, right? So to me, it's irrelevant of where the market is, as long as we have an ability to know what the direction is and then trade appropriately on the reversal. So same concept as the buys, is just inverted to the sell side. Now, to me, when I get this question about what makes us different, I always think about transparency, upfront transparency of the process. Everything is delivered upfront to you, the entire trade details all at once. So you don't have to worry about relying upon a chat room where you got to log in to see what the updated trades are. You don't have to worry about that. Everything's up front. And I think, to me, that's one of the biggest differences. The other difference, I think, is the method of setting the trades up in advance, not having to be in front of your computer. You know, this time right now is literally when I trade, is this time. The only time I'm in the market during the day is in classes. 15 minutes or less is typically what the average client spends on the signals, putting them in their account, setting them up, and then moving on. Some of my clients have been with me for years. They'll do it in, you know, a few minutes. So when it comes to each of the signals, what I really prefer, I know I'm going to send you signals, try to make it as easy as possible for you to follow along. But what I really ask of you is that if you're going to sign up, at least have the availability to join me in at least one of my live sessions a week. So if it's Monday night that works, then come Monday night. If it's Thursday at noon that works, I really want you to be able to grow from this experience, not just from following along with me, but in my signals, but also to learn this, because I can promise you, if you show up to my classes and you participate, you ask your questions, and you follow along, you'll be amazed at the transformation and the simplicity of how we break this market down. I just really am over just the done for you crowd. I mean, life happens, right? You can't make everything. I get it, but I really do appreciate and see the experience last if you can take some time and follow along. Be able to come to a place that's live, interact with me, ask questions. Interact with the group, and you can really transform your perspective. So you can do either one, but like I said, I'd rather you do both. So if you have at least a few hours a week to spend with us and you like what you see, then by all means, please sign up. But if you're just going to do the done for you style, I just don't think you'll fully appreciate everything as much and fully grasp all the concepts. But, obviously you have the right to do what you like, but I encourage you to at least spend some time with us so we can really break this market down for you. Now, there's many in the room that just aren't sure, maybe just don't know if you can make the sessions, or maybe you feel you may not be able to follow along. I appreciate that. And so that's why we have this very simple guarantee policy. Give us 30 days. If you're not satisfied after 30 days, maybe you don't like my class sessions, maybe it just doesn't work, maybe you're just not making money, whatever criteria you want to put on us, all we do is we put a time on it. So all we ask is that spend the first couple weeks with us. And if you're not satisfied, let us know. Just send an email in. We're not going to call and badger you. We don't have a massive sales team that's going to call you. In fact, we don't have anybody on the sales team side that's reaching out to people and calling people and doing anything like that. We partner up with groups like Investorexpo to minimize our overall cost and infrastructure needs, so we can focus on one thing, and that's focusing on you, our trader. So we don't have to worry about all the other baggage that comes with, these large sales forces, large marketing budgets. We prefer to work with partners. And so we're able to keep things simple with you and focus on support and focus on training. So it's as simple as you see it. You have zero risk in the first 30 days. If you're not happy, just let us know and we'll refund 100% of your money back. So I got questions on results. So here's our results going all the way back to August 2020. It's about 400 trades. Now this is updated through, I don't know, I would say probably the last couple weeks. So Pfizer's not in here, Katie's not in here, some of our other trades aren't in here either, but this is as of a couple weeks ago. But this is our winning percentage. This is a win rate, trade over trade. So about 6 out of 10 over 400 trades is what we typically bring in as far as winning percentage on a trade by trade basis. Net profits, you can see, is a 3,513% net profits, and that's accumulation of all of the different signals that I've sent out. That's a total signals sent. So I always get that question, how do you have so much net profit with a 6 out of 10? Well, I told you it's about letting profits run and cutting losses. So our wins are about twice the size of the average loss that we have. So if our average loss is 35%, our average win is over 70%. So our winning basically 1.5 trades wipes out 1 loss, right? So that's how we're able to grow a net percent profit like that. So for this entire program, I already mentioned it to you. You're going to get all the email alerts, SMS alerts, access to the tracker. You're going to get access to 4 special bonuses with this, and it's all less than $300 for the year, okay? But you're going to have live training sessions, access to my toolbox with all my video lessons, all my resources for training, access to the Options Mastery Academy, money management training that comes along with it. So it's a complete round table type of experience where you have access to signals, you have access to me. This is my most favorite piece of this program, is the Market Pro Live Club. So this is our twice a week live trading, training, mentoring, whatever the market's throwing at us, session that's held about 4 hours a week, a little over 4 hours a week between these 2 sessions. So you're talking in a year, right? You're talking 200 hours of live analysis, trading, included at no additional charge as a special bonus. They're also archived, so you can't make them live, don't worry. We've got an extensive archive library, hundreds of, probably 1,000 hours of broadcast time that you can go through and review. This is the empowerment toolbox. So this is just a few of my favorite tools that I give out. These are our checklists that you saw. I add to this all the time. These are our core, our main checklists that we use. You'll have access to. We've got over 10.5 hours of content here. This is all teaching the strategy I went through today. So the method is called momentum breakout trading. And so this is 10.5 hours of content, how to read trends, how to harness momentum, how to set up your charts, how to find your entries, how to pick targets for profit, pick stop losses, right? That's all taught here. So it's like 10.5 hours. You're gonna have that included as a special bonus coming up to the end of the year. Options Master Academy, how to read option chains, how to use the different option strategies, how to select the right expiration order types, how to use those. Okay, I'm gonna include that as well. To me, one of the most uneventful, unexcited aspects of this is money management, but to me, it's some of the most important pieces of trading. Longevity is how do you manage money? So I go through some of my time-tested techniques there, included to really help master the process. So all in all, as promised, this is how to sign up. Okay, so it's $3.99 for the year. However, for the first 10 people, you can save $150 by going to this page. I'm going to drop the link for you and use the coupon code MATT, M-A-T-T 150. I'll show you where the coupon code is, and you'll save $150. So for $249, you'll be able to access all that I've walked you through for the entire year. And the best part is you'll lock it in as long as you're active with me. So I've got clients, hundreds of clients, and as long as you're active, you'll be able to lock in that price every year. So the first 10, I'm gonna drop the link in here for you so you have a direct way to get there. So don't worry about typing it. But the first 10, I'm gonna watch it. I normally have a whole team here moderating with me, but the office had a unplanned power outage, so I'm solo. So if there is questions, I promise I'm gonna read them. I'm gonna read them to you. Yeah, Keith, you're already in this one, buddy. Yeah, you're already a member here. Yeah, see, I already got clients here. They love coming to see these events. I do appreciate you joining. Great questions today, Keith, too. So let me pull this up. Normally I have Kim and Linda here, but sometimes life throws lemons at you, right? You got to make lemonade. So I figured I can, I didn't want to cancel today. So I said, I can run it, we'll make it happen. All right, so here's a direct link. If you're going to the checkout page, let me know. I want to be able to keep my eye on you. If you're going to take advantage of the 10, remember it's MATT 150. So I just dropped the direct link. If you're typing in rapidprofitsmethod.com, it's a redirect. Okay, so if it's not, everyone's computer is going to be different. If we have a lot of people in the room, so if there's any lag, use the link I just sent. That should take you directly there. It's a direct link. It's a full URL. Click the link I sent in the chat box. It'll take you to this page here. Okay, you'll see the page header, and then you can read more if you'd like, but click here to enroll. This big red button in the top, and then it'll ask you to add to cart. Okay, no purchase has been made yet. Just go to add to cart, and that'll take you to the checkout page. I want to show you where the coupon is. So once you come down here, you're going to see all what you're going to receive. Here's all the bonuses I talked about. And then you come set your basic information. This is what we use to set up your account. So you have access to the membership area, the empowerment toolbox, the Market Pro Live club trading area. You get registered for the Market Pro Live club. So make sure you got a good first name, last name, email, billing information. And then here's the coupon code right in the middle. So you want to type in MATT150. MATT150 here, okay, then hit apply coupon code, and then it'll say coupon applied successfully to your order, and then when you scroll down, you'll see your 249 down here, okay, 249. Now, I was talking to the team here about pricing, and the new year, you'll see this at 299 for the new year. So if you've seen this before and haven't pulled the trigger, now's the time to pull the trigger from a cost savings perspective, but also mainly because the conditions right now, we've really earned the right to see some breakouts, right? I mean, if you're here today with us, that shows that you've got a lot of tenacity. You've been able to at least weather the last 12 months, which I do appreciate, because if you haven't been in this condition before, I mean, this is not easy to be trading, so definitely applaud your desire and your fight to keep fighting. There's a lot of negativity out there in the market. It's hard not to watch somebody on a financial TV show talk, not being negative, right? And so that's why I think a lot of traders appreciate this method, because we try to steer away from subjectivity and focus on the objectivity of the market. Opinions are fine. Okay, I have nothing wrong with an opinion, but when it comes to making decisions, I want to focus on the data, focus on objectiveness, right? You can talk the talk. That to me is subjectivity, but when you walk the talk, that's buying or selling, right? The act of buying and selling to me is where the real value is. And I think by removing yourself from that, I think it really adds tremendous focus to you. Yeah, I appreciate that. I got a question. Does rapid profit methods produce better results? I've never actually broke it down, but based on the types of trades, the one thing about the rapid profit method, like I said, it's just more flexible. I mean, there's more dynamic process. It's not, I don't think any of it's better than the other one. It's just a different selection process. But just like anything in life, I mean, there's runs, right? There's one of the biggest mental things that I focused on in the last 15 years is focus on what we can control, right? What's in front of us. And so no trader out there in the world's 100%. If somebody says they are, they're full of it. I mean, I always run the opposite way if I ever hear something like that. What's most important is that you have a complete plan of attack, right? So if there's times where you go through drawdown, right, there could be back-to-back losing trades. But what's important is that we always have a money management strategy. We're always cutting losses. When there's a big flip to the market, when the market goes from extremely bullish to bearish, right, in a short amount of time, any types of longs, are going to be reversed out, right? You'll be cut out of profits. And so ultimately, as long as we have a consistent method of weathering any storms, because storms happen, you can't, stop Mother Nature. You can't stop the storm when it's started, right? It's all about longevity, money management, and that's how you really maximize and win the game at the end of the day, is ensuring you can play the game. So I always talk about and discuss when times to start to lower the average number of dollars per trade, right? And then when the market gets strong and it gets in a clear, decisive trend pattern, then it's time, okay, guys, go back to your normal trading size, right? Everything's about weathering storms and then coming out at the other end, right? And making sure we can make it through to the other end. And a lot of that comes down to money management. But yeah. I appreciate it, Paul. Appreciate the comment. He says, I'm in, OPG is awesome. Your twice a week training is phenomenal. Yeah, I appreciate it. I have a lot of fun with you guys. My guys and gals in the Market Pro Live, it's a lot of fun. I learned just as much, you guys may not believe it, but I learned just as much from you as you probably learned from me in those sessions. So it's a great camaraderie, great team in there. There's not a question that somebody in that room we can't answer. You know, if it's about a trade, if it's about trading accounts, different brokerage firms, you know, if we come across a stock that we may not be, you know, familiar with, someone in the room does. So it's a fun, at least for me, it's a lot of fun. That's why I end up going 2.5 hours in a 1.5 hour class session. Yeah, that must be a technical problem, PF. So if you're having an issue on the tracker, I'll look at it for you. Yeah, I shouldn't say that. Should have a percentage, but I just made a note. We'll go look at it for you. All right, so if you're on the checkout page, if there's any questions, like I said, I normally have a team of people helping me moderate, but you know, once again, life threw lemons at us, so we're making lemonade today. So I'm trying my best to stay on top of it. So if there's any, you know, if you're having an issue on the page, let me know. Sometimes it happens. Yeah, so the question for me is, you know, is $249. I mean, I know based on experience that the probability in this room is that 95% of you trade more than $249 in a single trade. Okay, so if you take a look at that $249 today, that's for 12 months of this. Okay, that's 8 live sessions a month. That by itself is worth $249 in my experience. But the reason we're able to offer a pricing this low, many of you have seen similar products like this. I don't think they're better than mine, but you've seen similar products like this, and you're paying $1,500, $2,000, $2,500 for this. A simple reason on the high level difference is because we leverage partners like Investorexpo. Many of you have seen me at the show before with this group, where we don't have this massive upfront marketing budget. And then how does that impact you? Well, that means we got to charge more, right? We got to bring in more to cover all that sales costs, marketing costs. Well, here, because I've been in the industry so long, I built up long relationships with many providers in this industry, that I use those relationships and then pass the savings on to you. Once again, like I said, I'm not a proponent of expensive software. I don't think it's necessary, but if you like it, that's fine. But for my core group, we don't use expensive software, because after learning this process, you'll find that it's not really needed. Okay, so that's another way my group saves costs. We have all these various sites that we use for data points that I give that are free, but they give tremendous data to help in deep analysis on different topics that we're running through. So you'll build an arsenal of tried and true, low cost to free resources to add to our tool belt, right? So $249 a year is a phenomenal investment. And if it doesn't work for you, I don't think I can, you know, been doing this long enough, I can't help everyone, right? You know, some people have time that gets in the way, life happens, right? Maybe you just don't jive with this type of trading. Maybe you like to be more active smashing keyboards and buttons. That's fine. Let me know within 30 days. We give you an automatic 100% refund. Okay, we don't have an army chasing you down. We're not gonna, you know, I learned a long time ago that when somebody wants to break up with you, it's best just to break up on the best terms possible, right? So it may not work out professionally, but we still want to part as friends. You know, life is funny at times, and maybe now is not the time, but in the future it will be, right? So there's no reason to burn a bridge and try to hold you hostage to some crazy long, you know, checklist of things you have to do to get your money back. I've done that before, and that is a nasty place to be and a nasty environment to live in. To me, if you don't, you know, there's no reason for us to force each other to work, you know, to work together. And the same thing on our end, you know, if we have, you know, it's happened a few times where we get somebody that's just really negative and constantly, you know, interrupting class, I'll fire a client too. You know, I just think we all deserve a level of respect, especially if I see or hear about a client giving one of my support agents a hard time, you know, without, you know, any valid reason. I mean, cussing. I mean, some people are just, you know, having a bad day. You can't take it out of my employees either, my team members, you know. So I just think at the end of the day, you know, treat each other fairly. I think we can all live in a better mental state. So yeah, it's profits, it's plural. So Jerry, it's plural, rapid profits. I also dropped the link. So Jerry, click the link that's in the chat box. That's the direct link anyways. You know, the rapid profits method is plural, profits with an S, or click the link I dropped in the chat box. That'll take you directly there without the redirect. You know, it's just a simple short link, but sometimes it's not simple, I guess. And I get it. So let me know you see that link. It's it's like done1.concordiafinancialexchange.com. Yeah, you're welcome, Keith. Have a great weekend too. Good to have you on there, PF. Yeah, let's see, McBride in there. I see your question. Yeah, I've got videos inside of here of how to set the trade up. Yep. I'm glad you have Thinkorswim if you're new to it, because obviously that's what I use. So inside of our training area, we have lessons in here. Right here. So placing trades. This is in the Market Pro Live Club. So placing trades, how to set up the OCO. It's right here, this video. So we already have it ready for you. Yeah, we've got everything ready. And then plus in class, so I'll be back with you Monday night. If there's any questions, bring them up Monday night and I'll walk you through step by step how to set up the trades too. That's why, that's the benefit of having these live sessions, because I can, answer your questions on the spot right there with the charts up. That's one of the big benefits of being there with you side by side. Take you by the hand. Because once you do it a couple times, it's going to be second nature, but it's always that first time, second time. Let me drop the link again. So it should be in that little chat box. If not, I put the screen back up so you can see it. Just make sure it's plural. So it's rapid profits. It's on the screen now below. That's a short link. It'll redirect you. So when you hit enter, it's going to take you to a separate site. We use this just because it's simpler. I mean, it's a smaller, shorter URL to type, but it's right here on the bottom. You got charged 3 times, Rocky? Yeah, well, oops. Yeah, we'll take care of that for you. Did you keep hitting the button? I'm gonna look right now for you, Rocky. Yep, I'll look right now for you. Oh, wow. Yeah, you came in hot. All right, let me pull it up for you. I'll get it. Yeah, it's nice. I haven't no, I only see it once. You see it, I only see it once here, so you have the options profit generator. You see 3 on your side? I only see 1 here on our side, Rocky. You got 3 text messages? Yeah, so let me just refresh it here. Yeah, we only have 1, unless if the other 2 show up here. Like, we only have 1 that was created at 6:17. But I just sent a message to my support team to look at it as well. So if it pops up, regardless, we'll let you know. But right now I only see 1. But if it does, like I said, I already sent it to the team, so we'll watch it for you. I wonder if the bank stopped it because they saw 2 duplicates. I don't know. Yeah, we'll watch it though. So if it shows up like tomorrow, we have let me put up the support. So here's our support details. So on the screen, you'll see the support information. You can text too, texting is easy. So you can text, you can call. So there's our support email, and then you have the link there too. Just so you have it now, handy if you need it. Yeah, so the difference between OPG and rapid fire, OPG is more of the low cost option. So those are typically about average $2.50 on average is the premium pricing. And they're deeper in the money. So those are always traditionally, 65 delta plus. They're usually one strike in the money, sometimes two. So they're more conservative by nature. And then rapid profit method, at times we'll be at the money, right at it. We may be just out of the money, a little bit more aggressive on strike selection. And then from a premium price standpoint, the rapid profit method is going to be, I'll push it up to $7, $8 if it's a good breakout stock, but attrition don't go, above an underlying stock of $80. So they're usually options profit generator are typically, $35 to, $5 underlying stock prices. So we can get those lower premiums. So you're going to be adding, with the rapid profit method, it could be anywhere from, 6 to 8 trades a week. So, as you know, it's momentum. So if there's low momentum periods, we're not going to pull as many new trades. I'm not going to trade just to send a trade out. We're going to look for specific conditions, specific patterns, and sometimes it just don't set up that day. So I just don't like to. I'm not trying to hit a trade number of trade quota, to say it another way. Also, we'll be starting stocks as well in there, so you'll also see different stock picks. When the market's been choppy over the last several months, it's not really inducive to some more of the strategies we use around straight stock picks. So you'll start to see in the next week or so stock specific trades with multiple profit targets, things like that. How many trade alerts under rapid? It varies week to week, but I would say on average it's 5 to 6 on average, but some weeks there could be 8, 9. Some weeks could be 2. I don't like to trade counter trends. I don't like to trade triangles or sideways conditions, so that's going to eliminate a few days throughout the month. All right, so the next live session, so everyone should have an invoice. You should have a receipt, and then also you'll receive a welcome email all automatically. So as soon as you get your first welcome email, make sure you add that email to your contact list, so that way when we mail you, you get it. We can't control if you get it or not. That's just how the email service providers are these days. The Gmails, the Yahoos, the AOLs, Hotmail, if you have Hotmail, they do control what you see, what you don't see. So make sure you interact and click on the emails so you tell your email provider that you want to see the content. Yeah, there's a webinar today at noon. Yeah. Yeah, on the PF. Yeah, I see that error. There's a missing, looks like there's a couple missing P&Ls, so that's why it's showing NAN. So I'll have the team update it, but that's why it's showing that way. I just saw. But yeah, we'll get it fixed for you, for everyone, really. Everyone's seeing the same thing you are. Looks like one of the P&Ls aren't adding up, so it's showing that error basically, but we'll get it fixed in the closed trade area. Let me see your account. I got it up, Rocky. Make sure you got it. Yeah, everyone let me know too. If you signed up and you haven't got the welcome email, let me know. I'll double check it. Oh, you have a Yahoo. Yeah. Yikes. Yahoo's like one of the worst. No offense to Yahoo, but they have a bad yeah, so the email was sent at 6:18. I see it sent, but obviously I don't see it opened. You also got your special report email. So Rocky, did you check your spam? It shows sent on our end at 6:18. Maybe spooling up. What time is it? Holy cow, it's 6:25. All right, well, that's a little over my time. Wow. But yeah, I see it here. I'll resend it. Let me see if I can resend it from here. Oh, where is it? Let's see. Welcome one. Oh, the webinar email? Oh, today you didn't get it? Okay, I'll double check for you. I'm gonna double check for you there. All right, perfect. So Rocky, I'll check your registration. There's a couple other people that had questions on the web registration. So the Market Pro Live Club you'll be registered in a separate, it'll come probably like 15, 20 minutes for those that are new to the Market Pro Live Club. Everyone that's already a member, you'll obviously you're already registered, but everyone that's new, I'll make sure you'll get a separate confirmation. It'll be a registration confirmation effectively. Yeah, I'm gonna send you a confirmation email, Rocky, again. So you should have another email coming to you from GoToWebinar. Just want to make sure you have it. Yeah, so the next session live will be Monday at 7 p.m. Eastern time. So like I said, I really recommend you try to make at least one live session a week. So if it's Monday or Thursday, I get life happens. So, always have the archive. You've got archives all the way to September 2021. So the reason that's beneficial is you can always go back to a certain period on a chart and go watch the session and see how we called it, right? So it's a fast way to really absorb, the content by going back and seeing how we called something and then seeing how it played out. So especially on the SPY, the NASDAQ, Russell 2000, all those big indexes we spend a lot of time on. All right, so I'm going to be cut out of GoToWebinar here in a second. There's geez, we're on 2.5 hours. So as I promised, it was a workshop, wasn't it? So hopefully you were able to walk away with at least one technique, one aspect that you can start applying and looking through the market through potentially some different lenses. We got a lot of you signed up, so that's great. I'll welcome you to our Market Pro Live Club on Monday and go through that order of operations live with you so you can get a flow of how we break down the market as a group. And we'll have a signal come out tonight. So check your emails. We'll have emails, signals coming out tonight. We already set up one today live, so we'll keep our eye on TD. There's a couple more that I saw that could be some potentials that you'll see hit your inbox. So appreciate you all. I want to wish you nothing but the best. Happy trading. And I'll see you in our next live event. So appreciate you all. Have a wonderful weekend. And I'll see you Monday night. Happy trading.